Good morning, good afternoon, good morning. Welcome to our next episode. So today we'll still talk a little on the market structure. So I told us in the last video that the market is in three phases. The accumulation phase where price is range bound. That's either the ranging market or the accumulation phase. Like market is not going up, it's not going down, it's just in a range. Then we'll have the uptrend when the market is making highs, like gaining strength, makes correction, impulsive push to the upside. This one now is an uptrend. Then we have the downtrend where the market is losing strength and depreciating on the long term. So we have the impulsive push to the downside, correction, impulse correction. So that is how the market moves. There is a range band. Ranging market here we don't trade. We avoid this market setting. Here's the bullish market where the market is gaining strength. You look for buying opportunities or will go long here. And here is bearish market sentiment where you look for selling opportunities alone. So this is generally the basic idea of the market. These are the three phases you always see the market. So your duty as a trader is to identify which of these three phases the market is in. Then you know how best to go. Then let's say, what was it called? Let's say we had we had a zone here. Market tends to be going up. That's your impulsive push, correction, impulsive push, correction, impulsive push, correction, impulsive push, correction. The market tends to get to a point much later. Then it gave a little pullback, correction, and a pullback. Yeah. In this scenario, the market has not completely reversed yet. The market is still bullish till the last correction leg is taking. I don't know if I'm a little advanced with. Like the market does, like some persons, they always tell you the trend, make the trend your friend, yeah? The trend is bullish. We're making highs, making highs, making highs. At the slightest form of reversal, people just jump into the market. No. That one is not setting the trend has changed from being a bullish market to a bearish market. So you only look for sales or look for trend reversal when your candlesticks confirm that the trend is about to reverse. Then when the last correction leg, let's say you had this push here, impulsive push, correction, impulsive push again, correction, impulsive push. You can see this was your first origin, sorry, origin of the first, the last point of the correction was here. Last point of the last correction leg was here. Till this low, till you have a full candle close below here, the trend is not completely changed, not a weak close, like a full candle close. Till you have a full body candle close below here, the trend is still bullish. What do I mean? Something like this need to happen. Close below, come down. This is when you can say, okay, well, the trend has changed from what's called a bullish bias to a bearish bias. So in the next video, I'll talk about the four candles that move the markets, that if you can understand them properly, you know how best to engage. Just four candles that I trade, just four. Good. So if you come here now, fine, let me work with this example. What was it called? This was a bearish market, impulsive sell, correction, impulse, correction, impulse, correction, impulse, correction again, impulse. The market now is changing. So we can see the market change from selling now to buying after this high was taken. So the market now changed from a buying market to a selling market to a buying market after this last, because you can see impulsive sell correction, sell again. The market turned bullish after this high was taken. So till this high, till we had a candle close above it, the trend was still bearish. Same again. If you check all these ones now, good. You can see impulse correction, impulse drop down, continue the trend. So some people will be looking for sell opportunity. So the trend is always your friend. So always understand where the market is at correct and what the market is doing. The same thing here. Impulsive push, correction, impulse correction, impulse correction. This is the last correction leg. So once market closed below the last correction leg, here it was a week. But once it closed below the last correction leg, and the trend has changed from what was it called? Bullish market now to a selling market. And that's that. Here again, the same thing. Your sell bias, impulsive sell correction, impulsive sell correction. So you need to understand like where you see more of a particular color candles. If you set your bearish candles, your green candles to red, if you are seeing more red candles, then you know okay, the trend is bearish. Then if you are seeing more of green candles for your up candles, then you know the trend is bullish. This one gave a flag pattern. Okay, we'll take time to show flag patterns much later, but not now. So we had an impulsive push here, correction, impulse, correction, impulse like that. So always understand the trend. The market moves in just three phases. Just three phases. You don't need to do much. Just three phases. One, the accumulation phase, where the market is price bound. Accumulation / range. That is the first market phase. Second market phase, bullish market. Third one, the bearish market. So this one is the bullish market. Bullish market phase. Then the third one is your bearish market phase. Like I told us, this one is price bound, it's ranging. Doesn't go up, doesn't go down. And now we had bullish push, correction to the up. Sorry, push, impulsive push to the up. And now we have a bearish market to the downside. So market always moves in these three phases. So your duty as a trader every day is to check which of these market phases are you in? Are you in a ranging market? You avoid the market. Are you in a bullish market? Look for buys, but market will probably gain strength and go up. Then are you in a bearish market? You look for sales. Okay, guys, the next video, stay put.